Good afternoon, guys. Wanted to do a quick trade review on QQQ. We posted this in the alert section of the Discord. And by the way, if you are not a member of the Discord, feel free to give it a shot. We do have a free area of the Discord. The link is in the description of the video. I'll get into the trade right after this. This is Patrick, and you're trading with Prime. Just so you guys can see what is going on with it here, what I like to see is the percentages. I don't ever really look at the dollar amount, although it is nice to see. 134%. I'm gonna walk this trade. I'll walk through this trade with you guys. And what we did is we entered this trade this morning at 6:43. Or the alert was posted at 6:43 rather. The trade was taken right after market open. And I want to show you guys what we did. And then about 50%, when we got up to 50%, we went ahead and said you can book half here. And then when it got to 100%, we said you could book all of it here. I held till the end of the day, and this was the result. And I just kind of want to walk you guys through the actual trade. So here we go. So we're looking at the QQQ, which is a proxy for the NASDAQ. For those of you who don't know, we're on quite the run up here. This is what we like to see. We like to see a bullish market under normal circumstances. And this trade was actually taken to the downside, and I'm going to show you this Fibonacci's from the highs all the way down to this bottom pivot down here the first day, which was 2/23, February 23rd. So I'm going to go to an intraday time frame. I'm going to start with the hourly chart. This is the chart that I'm trading. And so for me personally, like I like to look at the lower time frame sometimes, but I prefer trades on the hourly, 2 hour, 8 hour, the daily chart. Sometimes I'll enter trades before the 1 hour candle, and sometimes I will enter trades, at much lower levels, like 5 or 10 minutes, if I'm really going for like a pristine, a nice price. So what we're looking at is we're looking at Fibonacci retracement, and this is not the only reason why, and I don't think you can use just the Fibonacci's. They are good to use, but we have to have other reasons, not just the Fibonacci 50%, almost to the penny here. And so I'm going to remove the Fibonacci from the chart and really kind of show you what I see overall, the pattern that I see. We have this high up here, 338.19, and then we have a sell-off price going straight down. So pretend like this is one giant red candle, and then you have what's called bearish consolidation. Now, I know it doesn't feel like it's bearish consolidation because it's a pretty wide range, but that's what it is until price can get above these highs, the high of today. In fact, until it can get above 325.63, it's technically still bearish consolidation. It can continue consolidating in here. And what normally happens is it move to the downside. So what we're trading is we're trading this last pivot. And so I'm going to zoom in just a little bit more for you guys so you can kind of see it. This is the last pivot right here, the pivot high. And what was really happening is this move right here was a retracement or a back test, if you will, of this last breakdown from here to here. And so what we have today is another test of that section of the chart. So the price really needs to get above this area. And so that to me is the best place as far as risk versus reward. It's a 50% retracement off of the highs. Not only that, we're at resistance coming into gap resistance. And so for me, because of where the price came from, which was around 310, 311, I'm going to do a draw, not a draw down, we'll do a draw up around 4%. That's a pretty hefty move in one day and a half, or since Friday. I think that's Fridays. Yeah, since Friday's lows. That's a pretty hefty move. I think the Qs need a little bit more time. They did have a pullback in here coming into Friday going into Monday. We did have a pullback. And you did see this gap higher. So I think overall, if you're just looking at this area, this price action right here, I think that we could say this is bullish because you have an up move, it consolidated, another up move. And really what it's doing right now is it's consolidating. And so what I would say is this: if you start seeing price get up here, and for any reason we can begin to see higher highs and higher lows, then it would be a higher likelihood that will break through this resistance area. So what we're looking at is just today's price action, just this price action alone. Seeing this first this candle of the day was confirmation enough for me. So I knew at that point that even if we did find support in here, I knew that any kind of pump that we saw would probably be met with resistance. And so that's why I think it is an okay deal to hold the trade. This first bottom pivot down here was the 50%. Down in this area down here was close to 50%. Booking half profits, taking half the profits off the trade gives you a little bit better odds as far as being successful in the overall trade. And I realize I'm sitting here just doodling on your guys' chart here. So that's what we have to look forward to. Right now we're at support. This is a good place to go long if it wasn't at the end of the day. So all the names that you guys love, your FANG stocks, Apple, Facebook, all the ones you love that are in the queues. That was an optimal place to go long. Again, I probably would have went long here if it wasn't at the end of the day. You know, sell off into the end of the day like this. I never like to go long. Actually, I don't like to take a short trade either at that point. But so that's where that. Hopefully this helped you guys. If you guys want more videos, feel free to leave a comment under the video and let me know what kind of videos you guys like to see. If you want to see broad market, individual names, technical analysis, any kind of charting that we can help you with, let me know what you guys think in the comment section. Feel free to like this video if you gained value, and we'll see you in the next one.